Let's take a look at the auction clearance rates from the past week. Nationally, the clearance rate was 48.9% from 176 auctions. Sydney's clearance rate was 55% from just 20 auctions. Melbourne's clearance rate was 60% from 45 auctions. Brisbane was about 21%, that's from 14 auctions. Adelaide clearance rate was about 71% from 14 auctions. And the ACT's clearance rate was about 78% from 9 auctions. Joining me now on the set is PropTrack senior economist Paul Ryan. Paul, thanks for your time today. Auction markets, they're just starting to pick up again, but I guess it's going to get busier and busier over the next few weeks.
Yeah, exactly right. It's not unusual to have so few auctions this time of year. We're expecting once people come back from the long weekend after Australia Day, we'll have auctions continue in a better pace than we've seen over the last couple of weeks.
How much sort of traffic or interest are you getting on the website at the moment?
I think demand's still strong in the market. I mean, that's what's typified the past 6 months. Although we've seen home prices fall, we haven't really seen demand fall off that much. So we haven't got as many people in the market as we had in late 2021 in those heady days. But we're still seeing a significant number more people searching for property seriously than before the pandemic.
Later this week, we get the quarterly inflation numbers for the December quarter. What are you expecting to see?
Yeah, so I mean, everyone's expecting strong numbers still. So the big tension will be just how strong those numbers are, and does that change the RBA's view on the economy and how much it needs to increase interest rates? The market's brought down its expectations of interest rate increases over the break. So they're now expecting kind of 50-50 chance of an interest rate hike in February.
Yeah, obviously last year there were 8 rate rises. We started the year at 0.1, finished at 3.1. And over that time, you sort of saw property prices start to fall off and taper off. What's the outlook for prices this year?
Yeah, exactly. That big increase in borrowing costs has been the clear driver of home prices over the past 6 or 9 months. We're expecting that big decrease in borrowing capacity, down 25% or so over the past 9 months, to keep pushing prices down. Now, you'll see in the rental market, there's still an enormous amount of demand for Australian property. So there's going to be this balance. And later in this year, we're going to get really strong demand for property balancing against that really big decrease in borrowing capacity.
Yeah, looking at the rental market, just how tight is it right now?
Oh, exceptionally tight. So we've now got fewer available rentals on the market than at any time since 2003. We've got rental prices up over the past year, 6.7% nationally, 10% in capital cities. Rental vacancy rates are below 2% in almost all regions of Australia. So it's a really, really tough time for renters all across the country.
And are there peaks and troughs in the rental market, just like with the sales market? For example, we've gone through this holiday season, not too many auctions right now, but what's it like in the rental space?
Yeah, exactly. They have a different cadence in the rental market to the purchase market. So for instance, lots of rental properties turn over in January. It's the start of kind of university season. So actually, despite the purchase market staying pretty quiet, we've got really lots of activity in the rental market at the moment.
And are we starting to see any new trends with landlords with rents? Are they setting, is it still like an average for a 12-month lease? Or are we looking at are they giving out shorter term leases now?
We're hearing increasing anecdotes of shorter term leases because rent prices are increasing so quickly. And
why are rental properties in such short supply relative to before the pandemic in 2020?
That's the big question in the housing market at the moment, is there's fundamentally a real big shortage of housing in Australia. Compared to pre-pandemic. And part of the big reason for that is throughout the pandemic, changing preferences to have smaller households, bigger homes, means we're using the housing stock less efficiently than before. So essentially, part of this has been that rental properties are now smaller and we need more rental properties to house the same number of population than we did prior to the pandemic.
And do you think part of it might be landlords have the option of leasing out their property for a year or 6 months, or they could do the short-term Airbnb style leasing and potentially make more money that way?
That's definitely putting additional pressure on the long-term rental market. During the pandemic, of course, we saw a lot of Airbnbs come into the long-term market, and now we're seeing a lot of those retreat again.
And what's the outlook for rents over the next couple of months? Are we still going to see them go up?
Yeah. I mean, just the simple balance of supply and demand at the moment in the rental market is incredibly tough. We're expecting rents to keep increasing really strongly over at least the next 6 months, but probably throughout 2023.
Oh, well, Paul Ryan, senior economist at PropTrack, thanks for coming on the show.
Thank you very much.